Once again, this is Greg for Teslafaninsight. Our focus today is that Tesla just got a price target upgrade of $280 a share, and from a company called Piper Sandler. I'm actually reading a bit from an article uh, that was in Tasmanian regarding this upgrade. Just a reminder, this is Greg for Tesla Fan Insight. Please take time to like and subscribe if you enjoy the show. Also wanted to encourage you to join us on Patreon and want to thank all our Patreon supporters for that support. So Piper Sandler sees Tesla stock rising to 280 a share over the next 12 months. The valuation is based on Tesla's ability to fund its own business and increase the size of earnings thanks to high margin software sales. Tesla stock is up nearly 40% since the beginning of the year. Still, a Piper Sandler analyst thinks his stock has room to grow. Alex Potter uh, is the analyst with the price target. Some analysts have recently lowered their price targets for Tesla. They did so based on concern about the company's lower earnings because of its aggressive car price cuts this year. Piper Sandler also lowered its valuation from 300 to 280 a share. This reflects uh, its underestimation of the company's financial performance from 2023 to 2025, as Tesla operates with the short-term impact of lower prices and demand risks in an uncertain macroeconomic environment. So, finally, nevertheless, despite the decline, the $280 price target is very positive. Potter's bullish argument includes praise for Tesla's ability to finance its own business, a repeat of what they had said earlier in the article. So I read this and I thought it was obviously good news to see this occurred. To some extent, what we're doing here on our channel is focusing on, sort of quantifiable data that one can use to make assumptions about where things are going, especially when we look at the great investors and entities that guide the investing process for folks with huge amounts of capital. So the Piper analyst is great. The 280 price target is also great. There are a few things that I'd like to add to this analysis that I think are important. So, not listed in this article, but listed in the actual report from the analyst, is the fact that there's a thing going on which you may want to consider as well, which is on a weekly basis, you may want to consider looking up the purchase of particularly a Model Y in different parts of the country, different parts of the world. What this analyst used to guide his process was how long the wait times were for vehicles in all these locations and what those length of wait times imply about demand and supply of Tesla's vehicles. So in this case, what's basically happened in his argument is that there's been a 3 to 4 week addition in terms of time it takes before you're able to get your vehicle. And what that suggested to him is that there's still good to strong demand for Tesla, and the elongating times are impacting that. So again, for those of you who are somewhat doing your own analytical work, taking time to look at, well, what's going on with the back orders, how long is the wait time to get a vehicle, if you can glean maybe average price, which might be difficult based on you're just ordering on a page, but they will tell you what the prices are. The second component that I like to review here is I did a show a couple of 3 weeks ago, and what the show focused on is what happened with Tesla's price cuts. As you know, the first thing that happened was that all of a sudden it sent a whole bunch of people into the showrooms of Tesla buying a lot of Teslas, and it instantly introduced somewhat of a backlog because there are a lot of people that were jazzed about that price reduction. The second thing that happened is once we got through that initial blast of buyers, all of a sudden there was a slowdown in buyers, and it seems to be that the reason for that slowdown was that a number of competitors had elected to match the price of Tesla rather than allow Elon and company to gain market share at their expense. Now, I have to say that based on what Elon did, I don't think he expected that price cut. And the reason I say that is that he knows that his cost of goods sold is lower than those competitors, but he thought those competitors would give up that share and it would be a no-brainer as a win for Tesla. So what I'm so next what we had happen is that the question came up for Elon, which is we lowered the price, we initially picked up some good share, we all of a sudden weren't gaining share anymore, and in fact, because we're the price leaders, we're setting the bar for what everybody else is charging. So it kind of doesn't make sense to keep the price down so low, because all that happens is we lose per car profit, and there's no shift in market share in the process. So therefore, kind of why do it? The net of this, and why I think the stock price does deserve a bump up, is that Elon has begun a process where around the world he has now started mostly increasing the stock price or the price of vehicles, particularly the big sellers like the Model Y. So where this lands us is we're in a position now where I just think this is good news that we had this increase in price that was sitting out there. And this increase in price looks like he's going to hold to it. And I actually am expecting him to increase price a couple more times, because I don't think it's going to affect his market share. And I think he's going to do is add profit to the company that allows us to regain some, hopefully most, of the decline in prices that's occurred over the last few months in this price war technique. Now, as far as the analytical points that were shared by Piper regarding why they see the stock price being up in that 280s realm, I actually think that there is some merit to what's going to go on with software profit margins increasing on autonomous driving. I definitely think that's out there as a possibility. But we've actually had that discussion going on consistently for the last 3 or 4 years and haven't gotten delivery of that. So I think it's out there as a value add, but I'm skeptical about whether or not it's going to be impactful on the stock price right away, because there's been delays and there's been consistent upgrades of the software, but it has sort of never gotten to the we're ready to go, everything's perfect zone. What I do think, though, does justify this higher price is that I believe that we're going to get initial deliveries of the Cybertruck starting in July. And then what's going to happen, I think, is that we move into the fall with increasing sightings of delivered Cybertrucks impacting Tesla's profit and revenue in the short term. But the forecasts are going to have to include scaled delivery of those vehicles. And when I think this happens, that's when we get that push into that $300 price target, because I just think the stripped down version of the Cybertruck is going to be in the 60s or 70s of thousands, and the fully blown models in that starting at 100K, and a large group of sort of advocates in that 120 to 130K realm who end up picking up the vehicle, and it can do a lot more in terms of options for construction business owners and others that you can't really do with a Model 3 or a Model Y, etc. So therefore, I slightly disagree with the Piper folks. I think the price target is legit, but I actually think the reason it gets there in the 6 to 8 month time frame is the impact of the Cybertruck's arrival. And so that therefore leaves the possibility of the reasons why they think it's going to rise to add more sauce to it if in fact that occurs. But even if it doesn't, we have a path towards a nice up move of Tesla stock price in the process. So we look forward to your comments on this report and the core logic. One other thing I wanted to mention is that there was a discussion of Elon potentially no longer being the CEO of Tesla. And I thought this was an interesting comment because obviously he's committed to it. He's their largest individual shareholder. There are a lot of commitments that Tesla has made, or Elon has made to Tesla over time. The thing, though, is that if you look at Elon's schedule, he's blocked out time relative to all of the companies that he's involved with. And in particular, what I found interesting is there have been recent reports that suggest the current CFO is now asserting himself as kind of a chief operating officer rather than just the CEO, where he's helping to guide the company when Elon isn't around. I actually think less Elon time can actually be better for Tesla because Elon often talks about the principles of physics being the guide for how the company operates. So, hence, what we're going to end up with is a lot of decisions being made based on good fundamental business decisions that are outside, how Elon might want to think in contrast to what the needs or best interests of the company are. So the other thing that I've noticed about Tesla and companies in Silicon Valley is there are certain businesses, for example, the auto business, where there are a lot of brilliant people, most of whom have to bide their time for 15 to 20 years before significant decisions can be made by them. In the case of Tesla, you have all those bright people, but they're 3, 5 years into their careers, and they're making billion-dollar decisions that they have to justify, but they're free to influence a company at 30 or 35 the way a major like a GM or those guys wouldn't get the opportunity until in their 40s or 50s. So I therefore think that if Elon is around less, or even if he wasn't the CEO, it kind of doesn't matter because the blueprint is really set for what the forward progress is going to be of Tesla. And I actually think Elon overseeing it makes sense, but that there's a baked in product delivery schedule and process going on that's well set, and it will be tweaked by Elon's guidance. But I just think that the company's in great shape. So next, I'd like to mention our health tips. So just a reminder, you owe 20 minutes of walking today for mental and physical health. Number 2, 25 leg lifts a day with a 6-pound or 5-pound weight on each leg to strengthen quad muscles is another of our reviews. Recently, I met with a eye doctor, and as we shared, he recommended at least once a year, if you're above 50, to make sure there's no glaucoma or other eye issues that could be easily solved for low cost versus delaying, and then the issue becomes a lot more severe and a lot more challenging to repair, replace. So I would, I just think that we're in a terrific zone right now for Tesla. We do have a little bit of a gap here as we get the Cybertrucks rolling, but we end up with a nice outcome. At any rate, this is Greg for Teslafaninsight. Tschüss or au revoir French, Hebrew, Hoda, Hafez, Strazich, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese, Namaste, Hindi, Arrivederci, Italian. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.